Welcome to our YouTube channel, Info about Forex. Welcome back to our channel everyone. Today, we have some exciting news to share about the Australian dollar and its recent movements in the market. So grab your favorite beverage, sit back, and let's dive into it. The Australian dollar has been making headlines lately, and for good reason. After overnight gains, it faced a setback due to the latest headline CPI report. The year-on-year CPI for June came in at 6.0%, missing the forecasts of 6.2%, and down from the previous 7.0%. But what does this mean for the Australian economy? Let's find out. Despite the CPI miss, the S&P/ASX 200 equity index experienced a boost, as investors hoped that the Reserve Bank of Australia might be nearing the end of its tightening cycle. But there's more to the story. The quarter-on-quarter headline CPI was 0.8%, falling short of the anticipated 1.0%, and lower than the previous 1.4%. Now, let's talk about the Reserve Bank's preferred measure, the trimmed mean CPI. It recorded a 5.9% year-on-year rate for June, slightly below the estimates of 6.0% and the previous 6.6%. Additionally, the quarter-on-quarter trimmed mean CPI was at 1.0%, below both the forecast and the first quarter's figures. All of this data has fueled speculations about the RBA's upcoming monetary policy meeting next Tuesday. The interest rate futures markets currently ascribe a 40% probability of a 25 basis point hike. We'll have to wait and see how it unfolds. But it's not just about Australia. The global economic outlook is also playing a significant role. The International Monetary Fund recently raised its forecast for global GDP growth in 2023 from 2.8% to 3%. This positive news from the IMF has compounded the rosy regional perspective, especially after China's Politburo made pro-growth statements. Let's delve into some technical analysis for AUD USD. Despite the recent collapse, the currency pair remains within a 5-month trading range of 0.6459 to 0.6900. We observed a double top formation 2 weeks ago, and if AUD USD manages to break above 0.6920, the bearish pattern might be invalidated. But if it stays below that level, we could potentially see further bearishness. Looking at potential levels, resistance could be found at the prior peaks in the 0.6900 to 0.6920 zone, with further resistance at 0.7010 to 0.7030. On the downside, support might be near the recent low of 0.6715, which aligns with several daily simple moving averages, SMAs. Additionally, the 0.6690 to 0.6740 range could continue to provide support, but a clean break below 0.6690 could signal bearish momentum. That's a wrap for today's video on the Australian dollar and its recent developments. We covered everything from CPI figures, RBA projections, and the global economic outlook. Remember, the RBA's monetary policy meeting next Tuesday will be crucial for Australian dollar financial products. If you enjoyed this video, don't forget to hit the like button and subscribe to our channel for more updates on the financial markets. Also share your thoughts in the comments below. We love hearing from you. Thanks for joining us, and until next time, happy investing.